Okay, so if you look at this closely from the monthly time frame, you could see that we're actually putting a triple top here. So this was the first top, second top, third top, and then when the market got here, it simply just reversed to the downside. So as things stand here, this is actually pointing. This is huge selling pressure from the monthly all the way down to the weekly, and just a quick one. So we have this ascending trend line from here. So this was the first touch here, second touch here. So most likely we'll have this market melt all the way down here to give us that touch of that touch. Hopefully if it's gonna continue higher, but as things stand, I'm actually favoring the downside here due to this kind of selling pressure that we have here, and this is happening around the supply level somewhere around here like so. So now let's get on to the weekly time frame. Look at things from a clearer standpoint. So this is what the weekly time frame looks like. So I'm just trying to get every single cause for concern out of the way because I'm actually bearish on this guy. I took a sell trade somewhere inside of here like so, and it's actually that's actually gonna to make me money. Alright, so I took a sell trade, and then I also sent out this sell trade to the Telegram community, which the link is in the pinned comment like so. So be sure to also help yourself. So this is the weekly time frame as things look. So I actually had an earlier trend line inside of here like so, and quite frankly everything's out of the way. There's absolutely nothing holding this guy from collapsing further. So however, you guys know that the downtrend is in terms of principles. Yes, so the principle of a downtrend states that after putting in a lower low, you must come and put in a lower high. So moving into next week, I do actually expect the market to pull back a bit. I mean, we've had like a decent run to the downside so far. So I'm just gonna go ahead and highlight the levels that I'll be watching out closely. So I do have one at this 1.3700, somewhere around there like so. So I like to see how the market reacts around here like so. I'm personally waiting to see a pullback into this 1.36890. Once I see a decent pullback there, because this is also a lower low. Remember guys, we said that the market has to give you a lower high. Remember when we had this downtrend here, like so, this was a high break of structure to the downside, a low, then a pullback here. So this was a lower high drop, again high, low, okay, lower high, somewhere around here like so, and then we collapse nicely. So my long-term target for USD card moving on will be 1.3200. Alright, that is practically somewhere around here like so. But whilst you are short this guy, I like to actually urge you guys to take note of this bad boy somewhere around here like so. I'm sorry I have so many lines on my screen. I'm not actually in my trading desk. I'm not on my trading desk. Alright, so I just thought to quickly make a quick video for you guys just to keep up. Alright, so now whilst you're shorting this guy, your first TP has to be right around 1.34457 like so, and then once you clear base, we got all the way to 1.32000. So you guys 1.36890, 1.36890 right through to 1.31469. This is roughly 520 pips if I'm not mistaken guys. You can double check. 527 or 530 pips from here to here. All right, so we got space all the way to the downside. So moving into the next week, all we need to see is a very simple thing. Yeah, a 4 hour time frame pullback into the supply levels like so, then we'll shut this guy all the way down. So this is just what I think about USD card moving on. And by the way guys, we don't use lines. I'm just using this because I'm not on my trading desk, but we don't use lines on the chart. We use our levels. All right, so we use the key levels and the major and the minor levels. Yeah, major levels, minor levels. But for this guy here, a pullback into 1.36890 will be ideal for us to go short on this guy. I had some very beautiful trade inside of here like so, maybe money, and this is another opportunity guys. Like if the market has 500 pips to give you, best believe you're gonna have so many opportunities to go short on that guy. If you're selling, if it's a downtrend, in 500 pips you could have like 2-3 trades, man, or even 5 trades if you're targeting 100 pips each. You get me? So don't worry guys, sooner or later I'll be back on YouTube with proper explainer videos as to how you can actually go ahead and maximize trades. So if the market has 200 pips to give you, you can actually turn it to 600 pips. All right, in terms of entry, scaling and all sorts of things. Don't worry guys, you guys are in for a long ride. I'll be here on YouTube properly and start teaching you guys some really good and decent and very important trading nuggets that you guys will actually find useful moving on your trading journey. Yeah, so for USD card is very simple. A pullback into, what is that? A pullback into one point, guys, sorry, the birds. All right, so 1.36890, that's a pullback region, and then we shot this guy all the way to 1.34457. First take profits, and then subsequently we should see this guy collapse nicely all the way through to 1.31469. So roughly 530 pips to go. All right, that's just that for USD card. So let's move on to the next pair. Alright guys, so moving on, we have the USD CHF. So this actually went ahead to print us a head and shoulders pattern like so. So obviously this is where the neckline is around. Let me just put this nicely. So this is just where the neckline is around. So what you need to see is very simple. A pullback into 0.82321. I think this will be the final leg down for USD CHF. Sorry guys. So this will be the final leg down for USD CHF to take this guy all the way back down to 0.7900, because this was where the market reversed at significantly on the weekly time frame like so. So head, shoulder pattern, neckline break like so. You guys know that the amount of pips accumulated in a range, once the market breaks, that has to give you that equal amount of pips long term. All right, so now this is where the neckline is of this head, shoulder. So what we need to see is very simple. We need to see a pullback into, what is this? We need to see a pullback into 0.82022. All right, so this is where the neckline is, and they shot this guy from. You can see where this bearish engulfing daily candlestick actually opened and closed. This is where you want the market to pull back into, because this is huge selling pressure here. There is liquidity there. The market has to go back there, test it neckline, then give us an entry confirmation on the 4-hour time frame or the 1-hour time frame, preferably 15 minutes time frame, whatever time frame you use, guys. Just look for certain opportunities on this guy. And by the way, if you found value in this video so far, I urge you to go ahead and subscribe to the channel and then turn on the bell icon as you do so. And guys, if you want to learn how to trade like I do, the link is in the pinned comment, guys. The cost is literally next to nothing. Enroll for the mentorship program. Come and learn how we do these things in depth. All right. So crude oil, guys. A lot of things happened. All right, a lot of things happened. We had the Middle East crisis, and that's the thing with trading all of these luxury pairs, all this gold and crude oil. So all these things, all these commodities, they easily get affected by crises, geopolitical crisis. Whenever you have tensions, yeah, you would definitely get a reaction from the market. Now moving on for crude oil. Now since we've actually gone ahead to break, and I said to you guys last time, I said provided that the market remains below $64 a barrel, which happens to be this supply level here like so, we could actually see this guy collapse further. And I did actually mark out a level down here like so. Check my last two videos. I actually explained this thing proper. So now moving on, since we've actually broken back above $70 a barrel, so what we need to do now is see a pullback into at least 66 or $68 a barrel. From there we can actually start looking to the blue side of things here. So moving on, my next level target for crude oil will obviously be $80 a barrel from here. Okay, so what I need to see is very simple. We already had this head shoulder pattern. So this is like an inverse head and shoulders pattern. So this is the neckline somewhere around here like so, and the most immediate demand level is somewhere around this $66 a barrel. So what we need to see is very simple. Allow the market pull back into $66 a barrel or $68 a barrel, somewhere around here like so. Then look for a decent buying opportunity and then ride this guy all the way to the downside, all the way to the upside now, because now there's a shift in trend as it stands. We're actually out of this trend line like so. So this was the trend line that was holding this guy down, and as things stand, you're actually out of this downward trend line. So things are starting to look to the upside. So yeah, like I said earlier, just allow the market pull back into your demand levels like so, 66 and $68 a barrel, and then you can actually start looking for buying opportunities to the upside. And I could already spot a trend here like so. So this is, what is this crap? So this is like the first touch here. This is the second touch. So what you need to do is allow the market find its third touch anywhere it wants to. Preferably this $68 a barrel region looks like somewhere that the market wants to come and test nicely. Or if this level doesn't hold like so, you can actually drop all the way lower to $60 a barrel. But what you need to see is a pullback into either of the demand levels, and then you can actually go long from there. It's pretty simple and pretty straightforward, guys. What you see how it looks, a pullback down here, then you're good to go. All right, just get the pullback down here. Already this is an exhaustion candle. This is a bearish pin buy here. This is an exhaustion candle. So what we need to see is a pullback nicely. Hopefully the tensions calm down. If they don't, you're most likely gonna see this guy keep rallying higher. But in terms of technical analysis, we need to see the market pull back into this region like so, then we can actually start going long on this pair. Next one will be US 30 is just pulling back nicely. Let's talk about the pound and then the euro. So gold is actually on its way to the upside, guys. Like I said earlier, once we clear that trend line, we'll actually be seeing gold at most likely $4,000 per ounce. All right, so now for the euro dollar, moving on. So this was where we actually smashed TP. So the first TP has been hit on these longs, on euro longs. Let me just show you what that looks like on the daily time frame. That's it there. So what I need to say is very, very simple. Since we have this trend line, ascending trend line from the weekly time frame perspective on the daily time frame as well, so the market has pretty much, respected this trend line over time. So what we need to see is very simple. We pull back into 1.1400, like so, then we can actually start looking to buy this guy. So moving on, yeah, I think we are actually, oops, that's my phone, guys. So I think we are actually clear to the upside, yeah. So a pullback into 1.14000, guys. It's a free rise on euro dollar to the 1.22000 max. So we got roughly 700 pips to go on this guy. This is huge, guys. You make so much money in this market. This second half of the year, guys, is a lot more active than the first half. I mean, the tariff came in, but yo, this level of volatility is mad. All right, so this second half looks promising, looks really good. Now this is a double top here, like so. I'm looking to see if it will hold nicely. If it holds, we could see this guy pull deeper. But as far as this channel remains intact, guys, we're actually still gonna continue higher. All right, so now the pound sterling seems a bit more choppy than the euro dollar. I'm not really a big fan of the choppy market. Price action is just crappy. There is no, I mean, I'm seeing series of high highs and high lows, but it's not something that looks like we can work with. It's just very steep. The trend is very, very steep at this point. So I would advise you guys to just stick to the clearer pairs. Yeah, the pairs that are clearer will make you easier money, man. You don't need there is no award for the guy that can predict or can analyze the most choppy market condition. You don't need that, yeah. So let me see what is happening in the market. Yo, I have this DAX. So I'm watching DAX, German 30 index. I'm actually fancying the buy side opportunity of this guy, because I can clearly see that, guys, we had actually been going long on these guys for a very long time. Actually, we're short because of the tariff, yeah, and then the market came into a demand level and they started to point to the upside. Now we've actually broken structure to the upside. So here's what's gonna happen here. Allow German 30 balance out nicely at this 23,000 basis point, like so, 23k 434. So allow it balance out nicely. What you need to see is the 4 hour bounce off of there, because now we're actually in base of demand level, yeah. So I do see this beautiful demand level that has reversed price, in recent times here. So this was the first touch here, second touch. So this was always going to be the third touch here. So allow the market figure out is bottom. Allow it, do not give the market a bottom. This is the mistake that most of you guys always make. Most newbies in the market, like, they come and then try and force and assume that the market has found its bottom. Allow it find its bottom by itself. Yeah, let it find its bottom. Let it pick a bottom for itself. Then you can actually start looking at going long from there. So as things stand here, this is where the bottom is at 23,200 basis points. Allow this market settle in nicely. Then once you see a very beautiful counter trend line break, like so, you can actually start buying this guy to the upside. So my first level target for the DAX, moving on for longs, provided that this level holds at 23,200 basis points, it would be 24,393. And then once we clear that space, guys, we got space all the way to 27k, guys. I'm bullish on the stocks, guys. Moving on, I'm bullish on the indices. All right, that's just that for the German 30. The S&P 500, we are already locked in those ones. US 30, S&P, Nasdaq, those ones are actually moving in profit. Ignore the pullbacks, guys. This will always happen along a trend. A healthy trend must give you pullbacks, yeah. So pullbacks are like second chances from God to do the right thing. So ignore the pullbacks and then just focus on the pairs that actually have what you want. All right. So let's see gold. So gold, on the other hand, has literally been a very good boy. I've not really been talking about gold that much, but gold has ever since we saw that counter trend line break, like so, it was very easy going long on gold here. All right, so if you actually took this trade, well done. All right, so now on gold, moving on, now we need to see a pullback into regions of about, this is like lower time frame trades, and I'm not really a big fan of lower time frame trades. But if you're going to take gold, allow it pull back nicely into 3,360 dollars per ounce, like so, then you can actually start going long on this guy. However, I have a better setup for you guys, which happens to be on silver. So since gold is doing some golden stuff here, so silver looks like the one that has like the clearer price action. So what you need to do on silver is very simple. Allow it pull back into 34 dollars per troy ounce on this guy per ounce. So $34 an ounce for silver here. Once it comes here, balances out nicely, this is where you want to go long on this pair. All right, so this is the sweet spot here, because this is a Fibonacci third touch of the trend line demand level, guys. this is like the trade for you guys. All right, so I just thought to let you guys know. So silver on the other hand, first EP will be $37 per ounce. Once you clear that space, we got space all the way to $43 an ounce, which happens to be a huge mile away from here. So guys, imagine from here to here, you got like 1:7 risk reward trade. Just lock in, find a very beautiful entry once the market comes down here like so, and then you're pretty much good to go. All right, guys. So thank you so much for sticking to the end. And if you found value in this video so far, be sure to check out the pinned comments. That is where you actually get to enroll for the mentorship program. It literally next to nothing, and then also brings you to the free Telegram community. And then also you have my email address. You can actually email me your personal questions. And then also, guys, YouTube sends me each and every single question that or comments that you make on the comment section. So guys, let me know what you think in the comment section like so, and I'll be here to answer every single question that you have. Once again, guys, my name is Desmond Samuel. Be sure to subscribe, turn on the bell icon, and then please share the videos to other traders as much as you can. All right, so peace out and trade safe and apply proper risk management, and I'll be back to let you guys know what's up. All right, bye.